We'll give people a few minutes to hop in here. I see people starting to come in. Welcome, everyone. We'll get going in just a few minutes. While you're coming in here with us, we want you to participate with us in chat. So as you're coming in here, share with me what happened on your 4th of July that was your favorite thing. Let's get some good vacation vibes continuing to go on, even though we're back to work as of yesterday. I don't know if either of you, Mary or Jim, did you experience like in your work that there was like a letdown after the 4th of July holiday in your office?
It was very quiet here. I always work the day after 4th of July. Because a lot of my coworkers travel, so I always just stick around here and I choose to work, and it's very quiet around the office and
Yeah.
wasn't too bad of a day.
Yeah. How about you, Jim? Did you work yesterday? Or that was yesterday. Yeah, yesterday.
I worked the whole week, other than the 4th last week. So I had a lot of team members off. And yesterday, everyone hit the ground running because it was the second half of the year. So they were
Nice.
pretty energized.
Nice. Love all the great things in the chat. And happy birthday to Michelle. Is it Michelle? I lost my chat there for a minute. Sorry about that, Michelle. I saw that it was your birthday. Michelle Smith, happy birthday. All right, we're going to get going here. This is the last week in Mortgage Today. I am Faith Howard Mooney. I am the SVP of Member Engagement here at the Mortgage Collaborative. And I feel so lucky today that I have with me two people that have not done this before and are so excited to do this with us. So with that said, I have Mary Leuthauser, who is the AVP of Mortgage Operations at AmeriQ Credit Union, and Jim Labbe, who is I have Director National Inside Sales Manager, but correct me if I'm wrong, Jim. I didn't write it down when we talked before.
No,
On the
that's
sales
perfect.
side?
Thank you.
Okay, perfect. On the sales side for MGIC, Mary, I would love it if you would just share a little bit about who AmeriQ is here at the beginning.
Sure. AmeriQ, we are a credit union in upstate New York. I stay upstate. I know that means different things to different people depending on where you are in New York. So upstate to me is central New York. We are right around Syracuse and Utica in New York State. We are a $2.7 billion credit union. Currently, we are only in New York State. I work in the mortgage operations area. I oversee our processing and closing area. So that's just a little bit about us.
Yeah, and you guys have been with us since March of 2022. So for a couple of years now, that flew by really super fast. We always love having you participate in our stuff in the network. And Jim, you want to just share with people? MGIC has been with us as one of our preferred partners since almost the beginning. We're an 11-year-old company. So you want to share just a little bit about MGIC and what your role is there?
Yeah, so thank you so much. I've been with MGIC 10 years, and MGIC's been in the mortgage insurance business since 1957. We actually started that whole space, allowing for the major obstacle of down payment challenges to be met through our product. And we're out there helping all of our customers and all of the consumers in the marketplace achieve homeownership.
Fantastic. Thanks to you both. So as we get going here, people on the call, participate in the chat with us, please, and share your opinions and ideas. We always love it when you do so. One of the things that I thought we would talk about first that happened kind of this last week, and it's the first I've seen, correct me if I'm wrong, if you guys have seen this before, but cybersecurity has become like such a huge thing, just really everywhere, not just in our industry, but with people personally as well. And cybersecurity finally hit a credit union, which I have not seen happen before. So ransomware attack on a credit union, third largest credit union in the Bay Area, right before the 4th holiday. Had some Social Security Administration checks apparently bounced, shut them down for about a day and a half-ish for the most part, I think. And I would just love to hear from you, Mary, like kind of like what your focus in the credit union has been related to those types of things?
Yeah, I mean, this is the first time kind of seeing it in the news area. It's been something that we've been focusing on here at the credit union for a little bit now, especially at the manager level, the leadership level. Um, we have put a lot of technology into place here at the credit union, especially in the mortgage area in the last couple years. So it's been a huge topic that's been top of mind. How do we protect ourselves now that we have all of this technology out there? We went from what I like to call the dark ages of mortgage to current times. So for us, it's a lot of technology with our POS and our LOS and having electronic ways for borrowers to interact with us. So it's a lot of what we've been dealing with, borrower education and even staff education, because it's a lot of things that our staff has not dealt with before, you know, what to look for with phishing and smishing and all of the different terms that we use for ways that people are trying to get into our systems. So really, it's a lot of education, not only for us, but for our borrowers too.
Yeah.
And just making sure everyone is informed of, you know,
Yeah.
what's really out there.
Yeah, and people have gotten so sophisticated. There are things that look so real that you think are real that would apply to your daily life that you can click on that you do have to be really, really super careful. Jim, I would love to hear if you've heard from any of the customers that you work with, like as a partner in our industry, concerns that they may have related to this and kind of any news on what they are doing as well.
Yeah, I think, this is such a top of mind area. We at MGIC have, consumer information that is obviously of the highest, level of importance from a number of organizations, from the largest banks to, credit unions to independent mortgage bankers. We are very much about education internally. So Mary, just as you said, phishing and smishing and all of the different ways that someone can try to access your organization. And as we saw with, the title companies earlier this year and at the end of last year, it can have a major impact on transactions and obviously on your customers, both confidence in working with you, but also in their ability to transact, whether it's being able to close. I heard of, closings that were delayed earlier in the year because of the inability to wire money and get, recording, handled. And it's a huge, huge area of concern. And we're not always paying 100% attention. What we find at MGIC is when you're on your phone, that's when you're most vulnerable, when you're looking at emails, when you're, kind of at an airport going from one place to another, or, running around and you're looking at emails on your phone. That's when we really have to be most aware. So I have something I do very carefully where when I'm on my phone, if it doesn't look right, I wait until I get back to a hard, desktop where I can look at where it's coming from. And we have a really good reporting system internally, and we are constantly testing ourselves out internally, or at least they're testing us out and letting us know how we do.
Absolutely. Absolutely. That becomes so important. I think it's just one of those things that it happens a lot of times just by one little click that somebody makes because they're in a hurry. I would tend to agree, probably not as careful when I'm on my phone and out and about on things. I kind of tend to clean up things in there. I follow your same rules, Jim. I'll clean up things that I can clean up really easily when I'm in that
Yeah.
situation. The rest of the stuff sits and waits until you get back in the office. I looked at it kind of maybe in a different way in that, credit unions, especially credit unions in the mortgage space, until I would say the last 5 years or so, you've kind of like flown under the radar of mortgage and served your customer extremely well. And, for a long time, credit unions were only more like a community bank in a very isolated market, but people have begun to expand. I looked at it as, oh, credit unions got hit because people have seen how effective in everything they are and how much more present they are in the industry. So, kind of in a complimentary way to the credit unions is they've made it in. Unfortunately, you don't want to see that happen, but I think that it's due to credit union success as now they're on somebody's radar, unfortunately, as well. Um, new trends. Let's talk a little bit about anything that you're seeing. Mary, I love it that you said you're coming out of the dark ages. A lot of people in smaller mortgage shops and stuff are still in that place, just so you know. So you've at least, come out of the dark ages. Any trends that you're seeing with credit unions that you think, would be helpful for our audience to kind of hear about?
Yeah, I do think that, technology as a whole is a huge trend. AI, I'm hearing a lot about AI in a lot of different spaces. Even with things as small as like note taking, which I noticed in here too. You're using an AI assistant, but in a lot of different meetings I'm in, we've got that AI assistant in there. And even just doing independent verifications. So verifications of employment, verifications of income, assets, things like that. I think that's a huge trend. I know a lot of the investors and aggregators are looking for things like that to be done as well. So I think that's a huge trend, especially for my group too, as we were kind of exploring that new technology space. There are things that we hadn't even thought of, 3-4 years ago. And now it's like, okay, well, we're right along with everybody else. So I think that's a huge trend to kind of, implement as many things that can be automated as possible to speed up process, make it a better experience for the borrower.
Jim, do you see that same thing from, people that you work with? I know that MGIC has always had like really great systems and everything, and maybe been a little bit more progressive on some things that you've done than other people. But do you see that same sort of thing in dealing with the clients that you work with?
Yeah, I think everyone is trying to figure out what technology means and ultimately, how we can serve our members when it comes to credit unions, serve our customers when it comes to banks and independent mortgage banks in the way that they want to be served. And then the pickups that we can maybe make in efficiencies. I will say, I've been hearing about this for a lot of years, that we're going to be able to, underwrite self-employed borrower files a lot more quickly, and we're going to be able to verify employment and deposits and all of that. And I think we're getting there, but it has been, at least from what I feel, at a slower pace than maybe other industries. Maybe it's because a loan manufacturing is not making the same, item over and over and over again. And there's a lot of individual components. We have to give the care that's needed for each individual member consideration and borrower consideration. So I think we're going to continue to see advances, but I just don't know at what pace and what that ultimately means for us on the, kind of fulfillment side when it comes to our customers, and then the members and customers from their perspective.
Yeah, I definitely feel like it's taken longer to move the needle on some things. I really thought that, COVID and everything that happened was going to be like the one time that if there was an opportunity to do some big change, that things were just going to miraculously change. That shows you how naive my thought process was. Because the one thing that I thought would totally take hold and never be done the same is closings. It's like, who wants to take time out of their day to go to a closing office? And now, granted, you can do a lot of it, or a lot of people are doing, a kind of dual process there, that you don't have to close or sign everything in person. Yeah. So it makes it much quicker. But I really thought that would like launch that into another thing. I see, Mary, I see you shaking your head. Were you in that same space?
I did too. That's one thing, our one biggest qualm, I guess, in New York is we're still very much tied to needing to do a hybrid e-close. It's something our borrowers ask for all the time is, can I do it all hybrid? I love that half of all, or it's not all hybrid, but can I do it all electronically? I love that, I can do most of this from my computer. So, we would love to have that remote notary available. So it's something we would love to push for, but I do think a lot of people still look for that human element. So I sometimes wonder if that's part of it too, is why it hasn't fully gone through.
Yeah, I think sometimes.
Yeah, I also think, Faith,
go ahead,
because our transactions right now are primarily purchase transactions in the market that we're in right now with the rate environment. I think it's a good opportunity for the loan officer to connect with those members and consumers. And I think it's a good opportunity for everyone who's put all of that effort and energy into the transaction to connect. So I think there's definitely those who are going to want the virtual, but then you have different state, restrictions, and then technology restrictions, and then obviously just the opportunity to connect again with people is always a great one.
Yeah. Yeah. I don't, it's like at one point in time, I really thought that mortgage would become like more of a car loan transaction. But when you really look at it, it's a completely different emotional. I mean, I love my car, don't get me wrong, but it's a completely different emotional thing that you're buying. And usually for most people, it's the biggest thing that you're ever going to invest in. So I do feel like some of that is true. Good point that we're in a purchase market right now. That could change things when we get to a point where if there were a lot of refinances going on, people may not feel the same way. I do love it. I'd have to say that you don't have to take like the whole day off of work anymore, and you can literally go in and sign for 20 minutes and be done and out of there, and it was your break during the day and you don't need to worry about it anymore. I think that's pretty convenient for people. But I think some people, we always have to remember, we're super comfortable with all of this. We do this all day long. We see people do it all day long. Other people only do this, some of them, anywhere from 3 to 5 times in their entire lifetime. So I do think that that's a very valid thing, Jim, that there is some of that people need that and want the people interaction to gain comfort. We talk a lot in this industry about young people and young people buying and everything. I want to switch it up a little bit today and talk about the retirees that we have out there. There was an article in the news that 1/4 of retirees are still paying off mortgage debt at this point in time. So not quite a third, it was 31% of retirees expect to be less secure in retirement than former generations. Would love Mark Renault. Yep. And part of that I think is true, though. I do think that part of that is true, is they keep bailing out their kids or buying large weddings or subsidizing their college. Jim, you can relate to that one right now. You got one in and another one halfway in. Mary, credit unions are typically very, very close to their membership. Share with me, like, if you're seeing some of those things and people planning for some of those things in your member base and what you see.
Yeah, I think that, there's a few different things. People are, they have big expenses, so they are doing refinances, or, costs of things have gone way up, but income has not necessarily gone up, especially for people who are on a fixed income. So I think that that's huge too. They're maybe being forced to refinance their house. Maybe not right now, rates are a lot higher than they were, but if they've got these additional debts, credit card debt, other loans they're trying to tie into, their property, they've got to find a way to pay for it and stretch that income. So I think that's a huge part of it too. So there could be several reasons.
It's probably a combination of all of the above, right?
Yeah.
Yeah.
I think that there's probably a lot of different economical reasons too. So I think,
My cost of insurance comes to mind. Taxes going up.
They've got to stretch that Social Security check pretty far.
Yeah. Yep. Medical expenses have not decreased. I would agree with that as well. Jim, how about you? Opinions or thoughts on that and kind of where we're heading with some of our seniors?
Yeah, I think, all great points about, fixed income and different situations. One thing I will say, and maybe I'm giving people too much credit, is if they're locked in at 2.5%, 3.5% on a mortgage and their loan balance is, manageable, it might make sense for them to hold on to that debt and invest in a CD. I'm sure Mary's credit union has some nice CD offers right now that they're, out in the market with, or other retirement strategies where that 2.5%, 3.25%, mortgage debt might look like good debt to them in the whole scheme of things. So again, I'm not saying that a lot of people are doing that, but it might be partly why some people are choosing not to pay off their mortgage. I know there was someone on my street recently, they have a $50,000 loan balance on a home that's worth, a pretty high number, and they are just choosing to keep it because they're sitting at 2.875, and they are fine with that, investing their money elsewhere. So I think there's opportunity cost to that equation as well.
Yeah, I think that that's probably pretty legit. It's like you have to look at what you've got outstanding other places and pick off the ones that are costing you more than what the other ones are especially when you're in a fixed income situation, for sure. Let's talk a little bit. I saw something in the news today that I did not share with you, but I'm going to mention here, and then we'll move on to talk about something further. Of course, I'm sure you both have heard of Not in My Backyard, where people are trying to change zoning and those types of things, and some communities are totally on board with it until they figure out that there's multifamily housing or some other type of residence going in other than single family in their backyard. I heard the term the missing middle just today, right before we hopped on this call. I was reading an article that was put out by the Washington Post, if anybody wants to look for it. And it's where they are going in trying to change zoning to develop more housing in specific areas that have traditionally and have laws that have made those communities only single family communities. And what it's referencing is it's small multi-unit residential. It could be anything from detached single family homes. It could be up to high-rise apartments that neighborhoods of individuals are getting together and suing the county for making a change. Have either of you heard of the missing middle before?
I have not heard that at all. No.
Yeah. Yeah, I thought I would bring it up here in case if anybody's on and they've heard of that before and they've experienced that. It kind of goes in line with Not in My Backyard, where people want housing to change, but they don't want it to change in their neighborhood because they feel like it has an impact to them, to the value of their home, that type of thing. The reality is some of those small homes that may be being built in those neighborhoods probably are more expensive than the homes that have been there for a long period of time.
Yeah.
Probably don't necessarily have an impact on the value, but it is the impression and perception that it would. Kind of along that line, I saw a new term. I'm always looking for like one a week, other than missing middle, that I saw, and it was, instead of NIMBY, it was YIGBY. Mark, good feedback, and Scott as well. Yeah, I think that we're going to see a lot more of that in counties and cities, and things as far as trying to make our housing supply greater. But this one was YIGBY, and it was Yes in God's Backyard. And I thought that was so intriguing. I thought, I've got to read what this is talking about. And in some places, in California is where it's happened, Jim, is it's institutions such as churches and other religious institutions do not have the same restrictions on the land that they own as it's outside of a municipality. So what some of those entities are doing is they're proposing building housing on extra land that they have to house individuals that are in their communities. I have never seen anything like that happen. Apparently it has happened in California, and in Atlanta, and it looks like San Antonio may be looking at it as well. Have either of you ever experienced that or seen that in your communities yet, or that is starting to happen?
I haven't, but I mean, my area is considered fairly rural, small area. So this isn't, anything that we've run into yet. I did read this and I thought it was interesting, especially the last bullet point that was in the article was talking about how it could come with certain preferences for its members, and certain requirements, to join the church or congregation. I was curious how that might affect fair lending, if it did come down to the mortgage space. So it brought up a few different points for me, especially because fair lending is so top of mind for people right now. So it just spun off a few different ideas on that.
That was one of the things that I thought of as well, that it's like, well, if they do that, do they have to follow the same requirements? Or is there some exception to that as well? And I went back and read over the article again to make sure that I didn't miss it. Because I thought, okay, maybe you missed it, and maybe this is totally legal that they could do this. But that was one of the things I thought of as well. It's like, how could you put restrictions on who could purchase those homes and still be in compliance with what you need to be in compliance for? Jim, because this happened in California, it's a small percentage. Of course, as all of these things that people are trying to do, it seems like it's just little baby footsteps towards gaining more housing. Have you seen anything like this, in where you service or where you live in California?
So there was a little freeze, so I apologize there. But, going back to the original point, what we see a lot in California is ADUs. And that's something that has been more on a statewide basis. Obviously, coastal California being very limited in available land, very high cost. I actually have someone I know well up in the Napa area who built a home and specifically built an ADU in the front of their property as a retirement income stream for them, but clearly,
nice.
Another opportunity on their lot to generate a home for someone else. As far as the other topic, I haven't really run into that yet in our area, but it wouldn't surprise me given, again, the limited land and the high cost. I do know of one congregation, one church that sold off a plot of land to a builder who is building condominiums because they could get, some good revenue in for the church by doing that. And it was right near a freeway. So it was not the most desirable area, but it was buildable land. But it wasn't specifically on their land because they sold it off to a builder. So I haven't seen that in our market yet, but it wouldn't surprise me given the limited resources from land and costs.
Yeah. In the area that you're in, ADUs and, a homeowner being able to put one of those on there, that totally makes sense to me because I think a lot of people had units like that. They weren't official units like that a lot of the time
Right.
on their property. Do you feel, I would think in California with the type of homes and everything in some areas, do you think that that is the only type of like additional housing you would ever find in those areas? I just don't envision California, and I don't know why, I could be totally wrong, culturally accepting a bunch of new multifamily housing, coming into some of the locations.
I think it's going to depend, Faith, on, so we have a lot of homeowners associations, and so it's going to depend on what type of land, if there's an HOA involved or not. And I do think you will see more of that. We see a lot of 3-story building versus single and 2-story building, higher density, whether it's going to be specifically apartments or multifamily, I don't know, but it is definitely going to depend on HOA versus not HOA and the different makeup and zoning of those areas.
Yeah. So build up when you can't build out, right?
Yeah, we see a lot of 3 stories, especially in Irvine, not too far from me, where they build 3 stories. So you better get your workout in every day going up and down those stairs.
I'm in 4. And I had somebody at our pool this last weekend said, look at our places. It's kind of almost like a row house with a rooftop deck. And somebody in the pool this weekend said, well, only young people can live in those. And I just bust out laughing. And they're like, do you live in one of those? I'm like, I do. It's like it keeps you younger. That's what it does. It's good for you. But I just don't want to ever have to carry the furniture in and out again.
Or bring in the groceries or anything else.
Yeah, it's like I've just gotten used to it. I think it's healthy for you to do so. So, yeah, so believe it or not, we're like at the bottom of the hour already. It goes by so fast. It has been absolutely phenomenal talking to both of you today. Jim, you guys hopped in here at the last minute. We owe him like a great big round of applause for being the team player of the day. I think Mr. Chris Perry probably owes you something because of that. You can tell him I said that. And Mary, how delightful to have you on. Either one or both of you, please come back and do this with me again. It's been absolutely such an enjoyable conversation to have with you, and appreciate you both a lot. You both are superstars. Thanks for doing this with us. And for everybody on the call, please come back next Tuesday at the same time and chat with us in the chat and talk about what's going on in the mortgage industry. Appreciate you both. Everybody have a great week.
Have a good day.
Thank you.